Hi friends, today I want to present to you a mid-cap banking stock that has been the best performer in Nifty Bank for the fiscal year 23, and this stock has given close to 160% return in just last 1 year. The name of the stock is IDFC First Bank. Throughout this video, I will present to you totally unbiased facts so that you understand why I call this stock as a stock for next 10 years. And if this stock continues to perform the way it has performed in the last 2 years, it will become a large cap bank in no time. Also, a big shout out to everybody who has been supporting me on this YouTube channel, because in the last 4 weeks, we have got 1.2 million views and we have crossed 50,000 subscribers. A massive thank you to all of you, and this will motivate me to improve the quality of the content in every single video. If you have not yet subscribed, be my guest now. With that, let's get this video started. The very first thing that we are going to do is analyze their loan book, extremely important for any bank's analysis. Have a look at my screen and you will see the loan book for 2023 and 2022. Very first thing that you will note is that their loan book has grown almost by 20% in 1 year. But that is not a big deal. Every bank has been able to grow at that level easily. What is really important here is look at their infrastructure lending. Infrastructure segment lending has dropped by 32%. Also, if we look at their last few years, from the time the merger happened between Capital First Bank and IDFC Bank, you will see that the infrastructure finance book has been coming down to a drastic levels, and this is extremely important point, because if you look at the bad debt or the gross NPA or the net NPA, you have a look at this chart here, you will see that in the infrastructure financing, their gross NPA and net NPA is nothing but the bad loans, very simply, that was roughly 25%. It is extremely hard for any bank to maintain that level of gross NPA and that level of net NPA. By reducing the infrastructure financing, what it will do to the bank is that their overall GNPA and net NPA is going to improve. It is already looking good because their retail book is now looking at 80%. Point number 2 that I want to make is that if you look at their retail loan book, you will see that in the last 2 years, they have launched new lines, new services such as digital loans, gold loans, and also credit card. You see the growth rate in the credit card sector, it is close to 74%. There is still a big market, untapped market when it comes to credit card, and this bank is making inroads into that segment. Therefore, the future prospect of this bank from a loan perspective is looking extremely bright. I cannot see a single point here that tells me that there is something negative about this bank from a loan book perspective. Second, very important point that we need to analyze is where is IDFC First Bank is actually getting deposits or borrowings, and is that cheaper or not. For that, let us have a look at this screen here, and you will see that in the last 1 year, they are able to get more customer deposits and borrowings, and they have improved it by almost 27%. It does not excite me at all. What really excites me is their customer deposit growth, and that is 47% in last 1 year. And their borrowings have not grown up by more than 2%, which is excellent news. Okay. Now, if you look at the long-term bonds and infrastructure bonds, that they have been able to reduce massively, and it is extremely important in cases of retail banks. Have a look at this data and it will prove it to you, because when you are borrowing your funds using infrastructure bonds or long-term legacy bonds, you will see that the interest that the bank has to pay on this is extremely high. 8%, 9%, right? You are not going to earn profit in the long run if you continue to do that. What this bank has been able to do is they have been able to reduce this massively. Their borrowings have only grown up by 2%, and their customer deposit have gone up by 47%. Also, have a look at this chart here. You will see that in the last few years, the way their customer deposits have grown, which is the cheapest source of deposits into the bank, they have grown it by almost 36% of annual CAGR, which is extremely important. Also, second important thing that we need to think about and analyze their deposits is that majority of their deposits are now coming from retail customers like you and me. Right? So have a look at this here. 78% of the customer deposits are coming from retail business. So they are not relying on some big corporates to give them deposits. And secondly, the retail bank deposits are extremely cheap. So from a deposits and borrowings perspective, they are looking extremely healthy. And that brings me to their Casa ratio, extremely important now. So what is Casa? Casa simply means if a bank has total 100 rupees of deposits, what percentage of that 100 rupees is in the form of current account plus savings account, because current accounts plus savings account is the cheapest source of deposits for the bank, and they can earn a lot of money using this current account plus savings account deposit combination. So higher the CASA, better it is. In case of IDFC First Bank, please have a look at my chart and you will see that in the last 4 years their CASA has grown up by 74% annually. I have never seen a bank growing their CASA at this rate. And if you look at the second chart, you will see that their CASA right now is at around 49.8%. And if we compare it with the largest banks and big banks like ICICI, you will see that the CASA ratio of ICICI Bank is close to 48%, 46%. So IDFC Bank has actually done better than likes of ICICI Bank or HDFC Bank when it comes to CASA ratio. The fundamental question now comes is, how come the customers are going to IDFC First Bank and opening more and more current account and savings account? That is what we need to understand, and there are two reasons for it. One good reason and one bad reason. Let us understand both of them. So the good reason is that in the last year, if you see, IDFC Bank is the first bank to waive a lot of fees that other banks charge. So for example, if you look at here, you will see that more than 25 types of fees that the banks charge, like passbook charges, SMS alert charges, checkbook charges, they have waived all of these fees. And when I was analyzing this, I was like, I should also go and open a bank account with IDFC First Bank, because the way they are providing the excellent customer service that will bring more and more customers, that will create a positive brand image for this bank in coming years. And secondly, what is the bad reason? If you look at the bad reason, you will see that their deposits are giving you 6.7% per annum interest. While we compare with likes of ICICI Bank, then you will see that they're only giving around 3 to 3.5% of interest on the savings bank account. Now, this is an extremely negative point from IDFC First Bank's perspective, because if they are paying roughly 6 to 6.5% of interest on the savings bank account, then what is likely to happen is their cost to income is going to be extremely high. Let me show you that data as well. So if you look at their cost to income ratio, back into 2019 pre-merger, it was roughly 95%. Insane cost to income ratio. But in the last few years, they have been able to bring it down. But still, 2023, you will see their cost to income is extremely high, 72%. And if we compare this with likes of ICICI Bank, you will see the cost to income is around 38%, 40%. Having 72% is almost the double. This is an extremely negative point about IDFC First Bank. And this is where, if IDFC First Bank is able to bring their cost to income in the next few years, this bank is going to rock. So far, if you are finding this analysis powerful, smash the like button and subscribe to this channel. Now the question comes that, Rahul, all of this is good. They have got good CASA and all that, but what really matters is the profitability. Is this bank making some profit or not? Through that, let us have a look at the profits. So if you have a look at my screen, you will see that in the last 1 year, their profits, the profit after tax has jumped almost by 1500%. And if you remember my previous video where I talked about 5 small cap banks in the bull run, this profit is not extremely high. But you might also question that, is this only 1 year that they have given this profit? What about the consistency of the profit? So let me quickly break it down for you. Have a look at this screen and you will see 3 main themes here. If you look at from year 19 to 20, you will find that they were actually making losses. And these losses were because they were getting rid of legacy loans problem, right? They had big loans, big bad debts, they were getting rid of that. So they were actually in losses. Then from 20 onwards, they started to make little profits. Now, why small profits? Because this is the time when bank was opening new branches. This needed a lot of capital, and the profits initially for any bank is going to be extremely low. But what it has done is it has laid the foundation for the bank. And from the year 2022, you see how consistently every quarter they are able to generate profit. And that is what really amazes me about this bank. Also have a look at their return on equity and return on assets. You will see that from a return on equity perspective, they are roughly at 13.45% in the year 23. And if we compare it with ICICI, you will see that the return on equity is roughly 15.89%. So they are almost catching up with likes of ICICI Bank. If we also look at their return on assets, it is around 1.41%. And if we compare that with likes of ICICI Bank, you will see that ICICI Bank has right now 2.01% return on assets. So IDFC First Bank is not yet there from a return on assets perspective, but soon hopefully it may catch up. Now comes the $1 million question that Rahul, should we invest our money into IDFC Bank right now or not? Is it overvalued? It is undervalued? Do not worry, let me present you fact and you make the decision yourself. If you look at the PB ratio of IDFC First Bank, you will see that right now it is at 2.44 compared to HDFC and ICICI, which are at 3.71 and 3.44 respectively. There's a big reason that HDFC and ICICI Bank enjoy that high PB ratio because they are quality bank. Absolutely no doubt about it. But if we compare the PB ratio of Nifty Bank with IDFC First Bank, you will see that green line is Nifty Bank. And right now Nifty Bank's PB ratio is hovering at around 2.83. And if you remember the opening sentence of my video, I said in the beginning that IDFC First Bank has been the biggest performer in the Nifty Bank in the last 1 year. So from that perspective, PB ratio of IDFC First Bank is lower than the Nifty Bank. And personally, I see for a long-term investor, somebody who wants to invest in this stock for 8 years, 10 years, I personally do not see this stock being overvalued right now. But if you were to believe at CLSA rating, that CLSA in the last few days have downgraded the rating of IDFC First Bank because it believes that there are stretched valuation because of the higher share price in the last few days, right? Now again, it is up to you to decide whether this might be a good opportunity because the stock price has fallen down, or whether you want to wait for further correction to happen. It is totally your call. I have simply presented the facts to you that in the next 8 to 10 years, if this bank continues to perform the same way it has been in the last 2 years, the stock prices are going to go up over a long period of time if we just ignore the short-term dynamics in the market. Also, have a look at the shareholding pattern of IDFC Bank Limited. You will see that in the last 6 months, their promoters holding has gone up by roughly 3.52%. And this has happened mainly because the IDFC Limited, which is the parent company of IDFC Bank, is ready to pump 2,200 crores into the bank as a fresh capital, which is again a positive sign because this money IDFC First Bank can use to lend to customers and it is going to add to its profits. The second thing that I also want to talk about is why I call this stock as a stock for 10 years because of this man, which is Mr. Vaidyanathan, who has been the CEO and MD of this company. And he's a seasoned retail banker and he left ICICI Bank from a board position in roughly 2010. So he was the main backbone of why ICICI Bank is where it is today because of this man. So as long as this man continues to be at the helm, I think the IDFC First Bank is going to do wonders in the coming years. Also, you might ask me that, Rahul, is there eminent risk that you see in this company in the next few months or years? Yes, absolutely. There's one big risk around the reverse merger of IDFC Bank, First Bank with the IDFC Limited, the parent company. And what I really don't know is what is going to be the swap ratio of the shares between these two. And secondly, that there are various views on it. Some people are saying that IDFC Bank is going to have access to more capital. But the way I see is that right now, IDFC First Bank does not really need the merger itself. I think it is going to mainly benefit the stakeholders of IDFC parent company. So I think we have to wait and watch what happens, what is the swap ratio that gets declared at that time. It is very difficult to predict and say anything right now. Friends, I have created this video from the comments from my subscribers. And if you would like me to make such comprehensive videos, please let me know in the comments the stocks that you would like me to analyze. I may not be able to analyze each one of them, but I promise to you that maximum comments I got on a particular stock, I will pick that up in the next few weeks and I will present to you unbiased factual analysis that you can totally enjoy and make informed decisions about your investment journey. With that, I will see you in my next video. Keep rocking.